Welcome to the Money Vikings podcast, where we conquer financial freedom. Join Greg, Jerry, and Bob as they discuss everything investing and personal finance. The Money Vikings podcast is hosted by three dads who are doing what they can each day to burn down debt and build wealth. Learn the path to true wealth. Their podcast and website, moneyvikings.com, is a treasure trove of ideas. So without further ado, here they are, the Money Vikings.
Money Vikings Premium launched the Armada, Biotech Investing Opportunities, and Jim Cramer apologizes to Cathie Wood. Will all my dreams come true? And more on the Money Vikings podcast number 48. Bob, Jerry, how you guys doing?
You had a dream that Jim Cramer apologized to Cathie Wood?
That's awesome.
I did. I had a dream. I gave a speech about it. I had a dream.
I thought it was a Disney moment. If you wish upon a star.
Well, hey guys, it was interesting because we might as well kick off with that. He said that he was wrong about Deere, the company Deere, because Deere is in Cathie Wood's ARC autonomy fund.
She doesn't know what she's talking about, guys. I mean, she doesn't know anything.
She has no idea what she's talking about.
She has no idea. No.
Hey, all investing has risk. That's all I can tell you. I'm still an ARC fanboy.
She's a brilliant woman, and she's created something amazing. And the thing is, Cathy has a team put together that really keeps a pulse on the market, in the real pulse of the market, like what's trending, what the generation is looking at, and what's up and coming. And it's not.
And that's what you're paying for, right? Yeah. With those fees, that's what you're paying for when you buy those ETFs, is you get a team. And we will talk about that today with ASTRA Genomics. But Bob, I want to get your take on something. A little thing called Money Vikings Premium launched. What? We've already had some successful trades. Oh, yeah. The articles are looking good. The newsletter just went out a few hours ago to all our premium members. Every single thing you can think of for everybody to conquer financial freedom. Again, I want to say, I can't say it enough. Thank you to Brian at Gator Traders, Jason at Paper Gains, the endorsements, the collaboration. I don't know. If I was 20 years old or 25 years old or any age, and I was like, where do I start to build wealth? And where do I start to invest? How do I do all these things? There are so many resources now that we are bringing together. I can't say enough good things about them because I think it's going to add a lot of value to thousands of people's lives. So.
I'm absolutely excited about it, and we've been getting good reception, good attention. So it went better than expected, and and the thing is, we have a community of people that know this is the launch, this is the mothership, the maiden voyage. And things are starting to open up and unlock. Coincidentally, I'm actually on, once we get done today and I get all things wrapped up, I'm going to be opening up a technical indicator section. So we have custom built technical indicators for all the Money Vikings Premium. They will be the only ones that get them. They're not for public viewing, so I have them hidden and encrypted. So just our members will get them.
Thank you, by the way, to our first members. I'm looking forward to getting to know them and talking with them down the line in Discord, and we'll get into all that.
That's gonna be kind of pretty busy conversations.
Yeah, have conversations, because I want us to be about collaboration, right? And working to build wealth and hearing what people are looking for. Are they looking, because we draw on a lot of resources here, whether it be options trading, charting, traditional things with me like real estate, ETF, sector, macro moves,
retirement, wealth, long term,
all that stuff.
It's it's the treasure trove of ideas. I mean, that's the thing is it's such a good term.
It's so good. So true.
Good. But the thing is, like, there is so much that we have, and there's so much that we have archived that we are building into sections, and they will be launching and releasing. So, first of all, I appreciate the patience that everybody has, but also I want to make sure that we're doing this in a way where it's not overwhelming, because we have so much stuff, so much information to share, and there's things that people never saw before. So,
couple of successful trades out the gate.
Yeah,
quite a few,
paid for the first month or two of the subscription. So
there you go.
Hopefully we can we generate that over and over again every few weeks.
We have, I mean, Jerry and I have we have actually quite a few trades that are in the pipeline for the premium members next week, and I'm excited about them, because we have I know out of a handful of them, 2 or 3 are most likely going to take off right off the bat this week.
Nice.
Let me tell you guys why I think we need this even more than ever. I don't know if down the line just complete passive investing is going to do it in the future. And I am, I have a part of me that's a passive investing champion, right? Where it's, hey, you get the 3, Vanguard ETFs, and you add to them and you dollar cost average, touch it. But let me tell you something. In the news this week, the Buffett Indicator is off the charts, which basically is signaling that stocks are overpriced. This is Warren Buffett's favorite market indicator. It's climbed 205%, signaling that stocks are vastly overpriced and a crash may be coming. The Buffett, let me tell you what this thing does. The Buffett Indicator takes the combined market cap of all publicly traded U.S. stocks and divides it by the latest quarterly figure for gross domestic product. So it serves basically as a rough gauge of the stock market's valuation relative to the size of the economy. And basically it's showing kind of like maybe it's a yellow or a red alert saying that things are a bit overvalued. And we've kind of been talking about this for a while, that things seem a bit overvalued. I still think there are diamonds in the rough out there. I still think there are plays to be made, but I think people need to do more due diligence. I think that classic just throw it in the fund that captures the S&P 500, which, by the way, the S&P 500, how much of it, Jerry, is the FANG now?
Oh, geez, like 80%.
The majority.
I mean, you're basically now just buying Facebook, Apple, Amazon, Netflix,
Google.
Yeah. I mean,
unless you want to buy an equal weighted ETF, which there are versions of SPY that are equal weighted, then you kind of get a little more diversification, and each company has the same weight, but not in the generic SPY that we all know and love.
Yeah. I mean, I'm not saying people need to overcomplicate things, but I just think a future successful investor has to be a little more engaged. I really do. And you need to have, I think we need to have more tools and more knowledge at our disposal to sort of, and I'm not even saying that you want to, people should be making always be making shifts to your portfolio and change a bunch of things, but at least, know that things are pretty dynamic.
Know what you own too. That's one of the things we came up with. I think we did an Instagram meme on that one. Know what you own. How much small caps exposure do you have? How much international do you have? How much bonds? How much cash? How much crypto? You should know what you own, know those allocations, and be comfortable with them.
There will always, the thing is, there will always be trade opportunities out there as well. And I think this is, to kind of your point, Greg, is that the mindset, and we've actually talked about this a lot on a lot of our shows, is that the mindset of passive income through stock market investment, I think, is a thing of the past because of where we've come from the COVID pandemic, like from the retail investment, this flood of new investor style, I think has really changed that, because it's turned the stock market in a way to a battleground. So yeah, you're still going to have your value. Your value plays will be out there. But you also, if you're going to get into this sort of investing style and actually managing it yourself, you need to be hands-on. You need to be aware that you can't necessarily just set it in there and expect it to do the best it can, especially if we see a correction coming.
I don't disagree with you, but you're setting up a really good brotherly debate right here. Okay, because I really could go. I think, Bob, I agree with you in a lot of ways. I think you need both. I think you do
moderation, though.
You do need a place for the set it, forget it. The three fund, the 3 Vanguard fund thing. But I'm totally on board with you. I'm totally on the Bobby bus. in terms of you do need that, and for everybody, for everybody, it's different. They have to decide, is it, is 20% of your portfolio the active, options trading, day trading is, or maybe that's, for some people it's going to be nothing. For some people it's going to be, 50%, for some people it's going to be 20. I don't know. I mean, that's an individual decision, based on risk tolerance and time and all that. But I do think that there needs to be a little more engagement. I think the set it and forget it might languish. So.
And there's people that are afraid to look at their 401ks on a bad day just because, they have that fear. And I don't think that's the right attitude. I think you need to own it, understand what you own, and be comfortable with it. I mean, dollar cost averaging and buying a little bit every couple of weeks is a great way to generate long-term wealth, but it's not the only way.
Jerry, you're so right. There are so many people that are, and you wish you could talk to them and say, first of all, whenever I hear that, and I know it's so true for millions of people, it's like, you want to tell them, you're never going to take this all out at the same time. It's to create a income machine in the future. And the concept that, oh my gosh, it went down $50,000 last month, but it's like, well, again, you've got to keep the long-term view here. You still own the underlying assets. A lot of those things are probably still paying dividends.
Mm-hmm.
I would still argue you're a hell of a lot better off than you were dumping it into a savings and losing out on inflation.
Right.
Yeah.
So,
yeah.
Speaking of know what you own, so just a quick note here: Cielo Waste, which I know a few of us are invested in, thanks to the Penny Queen, has a press conference, I believe, coming up September 2nd. So that is not too far away. Next week, right? Late next week.
Nice.
So yeah, I'm interested to see. This has been an interesting story, to see if this is a catalyst for something. This is one of those companies that attracts a very loyal following.
Mm-hmm.
Some people out there, bought shares at, pennies on the dollar, 20, 30 cents. They got in and started buying them on shares, and I think it hovers around $1 now. But it's one of those that if that technology works, I mean, that it's probably going to go up quite a bit. I
will tell you looking from a charting standpoint, it's a very strong chart. The RSI on it is it is sitting towards the bearish side of the band, but even with that, the price pullback, it wasn't crazy. It was kind of as expected.
Mm-hmm.
It's pretty much in, we talk about the cup and handle formation. It's pretty popular in the market, but in a way you're seeing that it had occurred from March until, what is it, about June, the cup formation. And then we had that natural pullback out of that. They certainly need a catalyst too, right? They need some kind of news, the catalyst, because there's a couple of things out there. Can they scale this thing? Can they desulfurize? If they can solve these technical problems, I mean, they have a very compelling story here. And I think a certain percentage of, Canadian fuel is legally mandated to have this clean diesel, this renewable diesel in it. So there's a compelling market. It's just, can they scale it? So anyway, I don't know.
And this is a long-term play, right? This isn't.
For me,
we were gonna buy it and then the next day get rich overnight.
So
even if nothing materializes on SEP 2, it's not the end of the world.
That's true.
Yeah.
That's true. I looked at it as a buy and hold.
So people don't get confused with it. Cielo, there's time frames in place based off of kind of when plants come online, the kind of expectation of their kind of growth plan. So looking at the end of the year for it to potentially exceed $2 a share easily, that's based off of what happens with the plant they're trying to bring online.
Mm-hmm.
But it's, I think, going into Q1 of next year. I could be wrong on that, but it's more of the 3-5 year play. Get it now, because somebody did an evaluation, taking in all the information and what they were doing, and I think they said something about it being over $100 a share in a couple of years.
And Bob, Penny's due diligence is amazing. It's totally awesome. It makes me really want to look at investments in a more thorough way. It's very inspirational to me. She almost, these guys in this community is great. And they kind of it reminds me of I work in real estate, like working with appraisers, right? They do all this and they apply logic, analysis, the business environment. They bring it all together and it spits out a number, but it's very thoughtful the way it's done. It's, they're models, but, so we'll see.
CWSFF is the ticker for those in the US that would like to acquire it. OTC, and you won't find it in Robinhood. You got to use
it's Vanguard, Fidelity, right?
Exactly.
OTC.
Yep.
So tell us about Astra, guys.
Oh man,
Astra, we were excited about, and still are. I mean, it's not over. We did what's called a risk reversal in Astra. They're a rocket company. I think recently SPAC and became Astra, and they are being funded by Space Force, and they've had a series of rocket launches over the past year, and they just had another one that we were excited about on the 28th or 27th, and they had a malfunction. We were hoping it was a catalyst. What we did was a risk reversal. So we actually we purchased a put at we sold a put at $10. So if it goes below $10, we have to purchase 100 shares at $10. And then we have calls at $12.50. So once it goes above $12.50, the put declines in value and the call increases in value, which is good for both of the purchases that we made as traders. So it's after hours on Friday, even before the rocket launch had the malfunction, air quotes, whatever that means. It was down below $11. It was in the tens. So as long as it stays above the tens, it could go down below 10 on Monday. We'll see what happens. But I don't mind purchasing it and wheeling it, which means I would sell calls against it after October when the options expire. So we'll see what happens.
And it's really, in these situations, it is about taking something that could just really suck, right? And actually pivoting and repositioning and finding the way to actually make it work to your benefit. And this is just a perfect example for our members, where it's like, we're going to show you what we're doing to pivot off of a situation that went south with a play that you put out. Because that's the thing, is that happens all the time. It's like, oh, okay, bad call, guys, jump out. Okay, well, how are we going to recoup this money, right? Well, we're not necessarily saying that. We're saying, okay, hold the ground. You may be in for a rough ride, but there is a play out of this that will actually recoup and then help turn profit out of it.
The same thing's happening with UIS, which we're selling covered calls, and I think we got in at $25.50, and now the stock is 24 something. So you'd be down $100, but the fact that we've all sold calls against it for 2 months in a row has now made it so we're break even at this point. And hopefully we keep doing that, and we start to make profit off it, or we sell it for a profit. You get the covered calls plus the distance between the price you paid and the $26 strike.
You guys could be like me, Papa G, and just buy ARC Space ETF. I'm just saying.
Why go through all this work?
Why
manage these options?
Just
buy an ETF and go to sleep.
Maybe sometimes you just want to grab the bull by the horns and ride it into the sunset,
how about hey Bobby, how about do both? Okay, that's all I'm saying. I'm gonna do both. Okay, speaking of tech, this is interesting. I caught this week, and I know we're definitely into this kind of stuff. Electric vehicle battery costs are way down, and the proof was in the pudding last week. A few years ago, a Nissan Leaf. Jerry, do you drive a Leaf still?
I do not, but I used to, and I really enjoyed it until I ran out of battery.
You still drive a Leaf? That saved you a lot of money.
Too soon.
Too soon. No, he got a lot of savings out of that thing.
Really did.
That thing was a savings machine with his solar and his. But anyway, a few years ago, a Nissan Leaf would cost you $39,000, right? So a new one, right? It is now at this point the same Leaf, actually even better. Actually, it's a better Leaf with 42 extra miles, is down to $27,000. And the point being, it's about battery costs. The chip come way down.
Yep.
So, you know, related tickers on that one are Drive that you guys know about, ARK-K, iDrive, LIT if you're into the. But anyway, I don't know. That's one of those future macro trends that I like to follow. I mean, EVs are part of the future. They're just, the adoption is going to continue to go. I see there's Teslas around here all day long. I mean, like everybody's driving a Model Y now.
There's a used market for Teslas now too, depending on how the batteries hold up.
They're expensive though, Jerry. They're expensive.
Well, they'll come down.
Yeah,
they'll come down.
I actually was looking the other day. I was like, but they're still up there.
The other thing is seeing the way that, you know, you have Elon Musk reinventing the battery pretty much, right? Those tabless batteries, for that coming into effect. It is the future, and I think people, I would hope, adapt to it and adopt it and welcome it, because I mean, EVs are the way to go.
Yeah, I'm the next car I buy is going to be an EV of some kind. So
they're great. They're great. I have the Volt and I'm loving it.
Man, that is awesome. So next, let's see, a couple of things crypto related in the news. So I don't know how, I need to catch up on how this is unfolding, but the infrastructure bill, which I hope goes through. I hope goes through to help our ailing infrastructure in this country, and also because there's a lot of investments tied to it that we've talked about on the blog and on the podcast that I believe could capture, again, another macro trend. If you have the government putting, you know, $1, $2, $3 trillion into something, it wouldn't be a bad idea to own an ETF that can ride that wave.
And you like PAVE, right? PAVE.
PAVE is my favorite. Yeah, PAVE is one of them that I like to use to follow that. But there's several others, but that's one right there. But anyway, there's a provision, a very interesting provision in there about crypto, which is strange, but that's very normal for Congress. There's all kinds of stuff always slammed into bills, little tiny pet projects and things. But anyway, the provision redefines a broker to include miners, validators, and wallet providers. So this is, as you can tell, very controversial in the crypto community. I mean, they don't want to be, I mean, their whole point is typically like, get us away from the government, right? Mm-hmm. Isn't that kind of the ethos of like of crypto people?
So, what does that mean? That if you're a miner, you now have to pay taxes on the income you've generated mining, right?
I think there's taxes and then all kinds of probably like regulatory type stuff, right? Because they're calling these people brokers. I mean, to be a broker, you have to have credentials and insurance. You know, if you're insured. Yeah,
it's so weird. Should I shut down my Ethereum miner?
Not yet.
I just made $47 in the last month. Just
that's awesome. That's rad. No, I wouldn't shut it down yet, but I would keep an eye on where this is going. You know, I'm frankly, guys, I'm torn because I have actually, up to this point, I don't necessarily like where this is going, but I have liked a little bit of the concept of some regulation in crypto, because I think sometimes a little regulation
another
helps.
fight.
There we go. Well, because my point is this: if something is the Wild West and there's absolutely no regulation, and people can, I mean, this happens. People can lose their, crypto isn't FDIC insured. If it gets stolen, if it gets stolen by some Russian hackers, you're SOL. Okay, you're SOL. You're not getting your money back. So right. So unless you have that crypto on cold storage, but most people don't.
What is funny though is that if you're an energy plant and you get hacked and you had to pay in crypto, the government will get that crypto back for you. That is what's interesting.
Yeah, they did.
Right.
Yeah, I mean
how is that for a catch-22?
Well, I would say that's pretty awesome that they were able, because again, that's my point. If this doesn't have, the people say, the growth to crypto is large institutional adoption, right? Large institutions aren't going to touch anything that's toxic and can vanish. I mean,
well, even the government has talked about doing a digital currency, which it's so odd. It's on one side of the media face talking about, because we all know it's the only thing that dirty deals are done with, right? Is cryptocurrency. Nothing else in the world
Yeah,
but
cash.
Right. Money laundering never existed before
never,
crypto.
Nothing. No drug money, none of that. But then on the other hand, the Fed and the government talking about actually a digital currency as an alternative, and so a complement to our standard currency system. So it's like, I don't know if there's two teams that just aren't talking to each other or what, but
I don't know. Can you imagine if you are on digital currency from the US government and you need to buy some masks or, I don't know, something to get COVID tested, and the government decides, because they programmed this smart money, that you can only buy certain things from certain retailers, and the transaction won't even go through or work because the money is aware of what it's trying to purchase,
what it's being used for. Yeah,
and that's controlled by the government. So just imagine the oversight that, and they're gonna have on our lives. I mean, this is what the worry is in China right now.
Right. Which is coming down hard on crypto, and I think that's been pushing the market down the last few hours, actually, before the show. So here's something I think actually that's going to push it up. Have you guys been tracking how? So ETH 2.0 is coming, and is on its way. It's working its way through the system, and I think it's supposed to be wrapped up by the end of the calendar year. But anyway, I read today that there's just a high rate of Ethereum being burned and basically being disposed of. And this is part of ETH 2.0. And I don't know, my initial thought is this is deflationary, or this is a way to, I mean, this would increase the value of ETH, because again, they're shrinking the supply pretty rapidly.
Supply, right?
And there's quite a bit being burned. I mean, it's in the at least hundreds of millions. I mean, maybe more when this is all said and done. So I don't know. It's very interesting. I mean, Jerry, you and I have been ETH heads for like years. I mean, we've been onto this ETH thing for a long time, and it was one of the first ones that you and I sort of put our heads together and said, this actually might add value. It seems to solve problems. So anyway, we'll see.
I mean, they're changing their entire monetary structure of how, again, they go from proof of work to proof of stake. So ownership gives you, I guess, what you would have gotten from mining in the past, or something akin to that. And that's changing right now. So it's very interesting. That's part of the reason I cashed out my ETH today, because as this is happening, I'm not sure like when I'm going to get paid next for the mining that I'm accumulating. So I thought I would just take a distribution and kind of move on and just kind of watch it from both the mining and the ownership side.
Nothing wrong with taking profits sometimes, right?
Right.
Doesn't hurt.
Unless I'm a broker now and I got to pay taxes on it.
Right. So I will tell you guys the total, because one of the things that I've for quite a while I've been watching is the total market cap for the cryptos. So total, right, is the ticker.
Yeah.
Because that ultimately determines the massive ebb and flow of the crypto space. And it's interesting because it is showing that there is this channel that flow is residing in, and it looked like we had hit a kind of an uptrend out of it. That was in August. And I don't know if it's going to continue on actually the downtrend in this massive channel, or if it's the trend truly has changed and all we're getting is that natural consolidation period to continue to the more higher highs. So that's something I've been watching a lot lately, because it has started to fall under certain thresholds and levels, and certain indicators, moving averages, that it's actually rolling under, which would indicate a slight downtrend. So I'm keeping an eye on that.
Opportunity to buy some on sale.
There you go.
Yeah. I'm going long, especially on ETH. I mean, I'm at that point where I've reached kind of like that comfort level of like, okay, I have this much in it. If I lost it all, I'm not going to be happy about it, but it's not going to impact any long-term plans. But hell, if things break loose and this, is the next big thing, be a tidy little profit. So,
and what would be wrong with just staking that ETH, Greg, and getting 5% return on it per year, just while you're waiting for it to go up?
Oh, are you saying like?
I'm serious. Yeah, in like BlockFi or Crypto.com, a lot.
Nothing at all.
Coinbase does it too now.
Oh, I didn't know Coinbase did it. I've dabbled with BlockFi.
Yeah, BlockFi Coinbase lets you do it with ETH 2.0, but they lock it up until the migration to ETH 2.0 is done, and who knows when that will be. So
I actually did not realize that.
I'm gonna be devil's advocate here. Why would I want 5% a year when I could probably make that in a day?
Bob, he's such a braggart.
It's a totally different kind of investment.
10 minutes of the day.
Because you want a well-diversified portfolio, Bob, and you can't have everything. And some people can't watch it all day long. That's why.
I know,
but people can't watch it.
Hey, what if we have some great hot trades that we're throwing out there? That's gonna. They don't have to watch it.
I know you're bringing the hot trades. I know
yeah.
Every week you bring the hot trades, Bob.
You better bring the ice cubes.
you Bob, you are a hot trade. Okay, take that.
Hot trades.
Okay, so hey, part of today's show was a sector focus, and I'm gonna kind of lead this, guys, but dive in when you want to add something. But I'm really growing to love sector investing. And I think we've touched on this in other shows, but a couple reasons. I'm a big macro trend. I love looking at macro trends. And if you look at macro trends, it's like we just talked about with EVs. Okay. Everybody knows that whatever anybody thinks about climate change, I don't care what anybody's personal opinion is, like the world is going in a certain direction and everybody knows it. Okay. We all see it. So my point would be, no matter what your personal views are, get on that, get some of your portfolio in to ride those waves that really, they can't be stopped. And I'll give you another one. The world is, some societies, especially America, they're also getting older. Okay. The society's getting older. There's stuff that we've looked at with housing and millennials, like for example, the housing market, single family homes, so hot right now. What's a big reason? Millennials. They're all in that age range of, 25, 24 to 39. Guess what people are doing from that age? They're forming families and they want homes. Okay. Yeah. And so these, I think there's so much power in analyzing these trends and finding some way to capitalize on them, because again, they cannot be stopped. You can't stop people from aging. You can't stop mega generations and what they're going to want. You can't stop technology. So the sector today we're going to look at is biotech. And, we talk a little bit about ASTRA Genomics we've talked about before. But I see this one as another area where there's just so many trends going with it where it really can't be stopped. Simply put, in these types of areas, and with biotech especially, it can be very hard to pick a winner. Okay. I'll give you a perfect example of this. Think back 3 years ago, guys. And if I had told you, oh, there's a company called Moderna, what would you have said?
Right.
You would have been like, okay, who? That's cool.
What?
Yeah.
Who are these guys?
Yeah, these guys, right? Okay. Who would have known that Moderna was going to be the huge winner of a pandemic and COVID, and their stock was going to shoot through the roof? By the way, Money Vikings started buying it at 20. Just saying.
You're welcome. $20. You're welcome.
I'm saying, join premium, people. We're keeping our eye on this stuff. Okay. But anyway, the point being, so I like to do ETFs for biotech. Another thing I want to add there. I'm reading a really cool book called The Code Breaker. Okay. It's about a doctor named Jennifer Doudna, Doudna, which is kind of funny. Doudna. That's so crazy. I didn't know the last word was DNA. But she's a really fascinating life story, pioneer in gene editing called CRISPR. Don't ask me what it stands for. Nobody knows what the hell it stands for. There's like 3 geniuses in the world who know what it stands for and actually understand how it works.
Siri, what is this?
But let me put it this way. Ask her.
Oh, sure.
Go ahead. Ask her.
Okay. Hey Siri,
CRISPR.
What is CRISPR?
CRISPR is a family of DNA sequences found in the genomes of prokaryotic organisms, such as bacteria and archaea. Do you want me to keep reading?
Boom.
No, thank you.
Nope.
Wow.
I've had enough. Thank you, Siri.
Wow.
Okay, I'll tell you, I have it right here. CRISPR is a technology that can be used to edit genes, okay? And as such, will likely change the world. The essence of CRISPR is simple. It's a way of finding a specific piece of DNA inside a cell, okay? And after that, the next step in CRISPR is gene editing. It's used to alter that piece of DNA, okay? And it's becoming less expensive and easier to do.
Mm-hmm.
So the point being here, you guys can imagine so many human diseases are based in our genetics, okay?
Mm-hmm.
Just the fact that we can't fight a coronavirus, a lot of us, okay? That we get a coronavirus that gets into our lungs and creates a ultra chaos of storm, right?
Yeah,
that is a genetic
storm,
problem because we don't recognize the spike protein. So here's the bottom line, guys. I really believe we're on the cusp of a biotech revolution in many ways. I'm not smart enough to understand it all, but imagine a future where intractable diseases are cured by harnessing the power of our genetics. Personalized medicine, genome engineering, genetic engineering, et cetera, et cetera. I mean, there are geniuses out there, unbeknownst to us, like normal folks, like living our lives, that are unlocking these codes every day. And so that's why I'm reading this book about Dr. Doudna, because it is so fascinating. So even though they're unlocking this human code, I do not think it's the Matrix. I don't think they're psychotic killer robots. I really don't. I do not think that's the Matrix. But anyway, my go-to is ARC-G, and it's with the expense of this ETF, right? You're buying a whole team of people that are doing the deep dive, right? They're discovering the next great companies that have the potential. And by the way, I think you guys know this, and I think we've put it up on our blog before. You can see the ARC trades every day or every week. There's definitely sites out there where you can see what they're trading and investing in. But
Cathy'sArc.com.
Cathie's Arc, there it is.
Yeah.
ARC-G, it contains absolutely mind-blowing companies, and I'll give you an example. So there's one called Exact Sciences, okay? It's changing the way we detect and treat cancer, okay? We've had some family members pass away from cancer, so this is near and dear to my heart. But it makes testing easier and less invasive, resulting in earlier diagnostics, which greatly improve cancer treatment and survival rates.
Mm-hmm.
So imagine investing in that company and how huge that's going to be. Like, that is going to change so many lives.
Right.
So that's just one example.
Teladoc's in there too. I'm just looking at Cathie's Arc right now.
T-Doc, yeah.
Teladoc. I mean, look during the pandemic how T-Doc, has been going. Like, that was huge. You couldn't even get to your doctor at times because there was so much worry. Right now, some of the hospitals in the country are full up.
Mm-hmm.
There's Teladoc for you. So I don't know. Bottom line, guys, I think the pandemic has shown that advanced biotech is a great future trend and growth area. And I think at the same time, I think there's an added bonus of that you can make millions of human lives better. So, I don't know, find your entry point. I don't know, is this the time to buy ARC-G? I don't honestly know. I'm a long-term hold.
Oh yeah. We got a good play we're going to be putting out here. I got a really good play coming out for ARC-G.
Okay. So is that going to be in premium?
Yeah, it'll be premium. We'll be posting on premium.
All right. Well, there you go. So I don't know, guys. That's my take on biotech. There's so much you can talk about in this world. I mean, it's frankly, from a investing perspective, I think there's a chance to make money, but I also think from just a human perspective, it's fascinating. You get into reading this stuff, and I don't even think you have to be a brainiac or some science major to look into it and see like all this cool stuff that's happening. But I think there's a lot there. So
do your due diligence. Amazing. Yeah. So we'll have to add that to the Money Viking book club, right?
Yeah.
Yeah.
We will. Yeah. I got and there's also some I've been diving in different directions with the tickers and different markets and whatnot. And I found a few OTC stocks as well that are I think positioned pretty well to be disruptors that might even get picked up by some ARCs. So
are those going up on premium too, Bob?
Yep. We'll put those up.
Okay, there we go.
Get them out.
Well, that was our deep dive this week, guys. We like to keep the shows, crisp and to the point and high level so that people can get, the overarching look at what they want to, invest in.
Yeah.
Any closing thoughts?
Oh man, I will say I'm again excited about the premium stuff. I have some sections that I'll be launching here soon. I have some cheat sheets and guides that I'll be one actually be adding probably tonight. I'll add that in. we'll just going to keep growing it and making it more robust.
Yeah, it's a great ecosystem, and check out our partners, Gator Traders and Paper Gains as well. There's just, again, this is the education that none of us got in school, right?
Yeah.
But it's so vital to life success.
It is.
And so we've kind of created our own university.
Yeah. Yeah.
The stuff they don't teach you in university.
Yeah. For one thousandth the cost.
Yeah, that's true. Yeah. No loans required.
Yeah, actually,
and it pays you to join.
You're gonna be.
Yeah, it's always funny to me. People will pay thousands and thousands of dollars for something that makes them like no money, and then it's like, hey, why not pay $50-$60 a month for something that, I don't know, could make you wealthier?
Yeah. And that's, I'm glad you said that, because actually until the end of the month, people, it is about $60. But after that point, it is going to be going up. So take advantage while you can.
Yeah. A couple more days on that one.
Yeah.
Loving it. All right, my Viking brothers and sisters. Thank you very much for listening. Bob, Jerry, always a pleasure.
Cheers.
Cheers.
Talk to you later.